Hello, hello, hello. Happy Friday, everyone. Happy kickoff to earnings season. How's everyone doing? Going to try to get through this video. We're in near blizzard conditions with 45-mile-per-hour wind gusts, and we keep getting power glitches. Not enough of an outage to kick on the generator, but enough to disrupt a lot of things. And for some reason, the battery backups on my internets can't glitch enough that it resets the internet. Both of them. So if I disappeared, that's what's happening. It's already disappeared a couple times this morning. But just letting you know, there's actually not a lot of great setups going into this. We had the PPI numbers come out with Sterling put in the chat. Thank you, Sterling. Good morning, Sterling, by the way. Good morning, Jacob. Good morning, Patrick. So where do we sit? Interesting things that Sterling's putting in the feed. Good morning, Anissa. Where else do we have? Good morning, Royal Palms. Good morning, Alan. So, no, CPI worse, PPI better. Remember, a lot of the PPI coming in better, and the PPI is just the core stuff. It's not direct correlation, but a lot of the PPI, and it came in better than expected, but that was due to the drop in crude prices. A lot of it was due to the drop in crude prices and diesel gas rolling into that. So if that, keep in mind, if crude pops back up and diesel and gas get more expensive, that can shift. But it's I mean, it's a good thing inflation's coming down. But remember, PPI is not as important on the deflationary cycle as CPI is. So, and we have a little we actually have a little deflation, not disinflation, but a lot. I mean, this coming in slightly better, some of the readings, but you still have, it's mixed. PPI year over year is still 1%, so that's coming in well below the 2% target. But the 2% is for, the what gets passed on to the consumer. So we'll have to see if this keeps manifesting into a retreat in the CPI and the PCE. So we got that out of the way. Cash Kari is speaking at 9 a.m. Central. And then it's a pretty quiet day. You get to get your rig counts in the afternoon. Now remember, Monday in the U.S. is Martin Luther King Day. Stock market is closed. I will not be here. Futures market, it will be open. Certain things, there's some adjusted trading hours, but again, stock market will be closed, so lighter trading anyways. That's why you see nothing on Monday. So I will be back on Tuesday, still dealing with a lot of stuff. So far, you have healthcare. UNH is gapping down after earnings. Tesla down still. BAC had earnings. Wells Fargo had earnings. I know Wells beat, but they're down. JP Morgan was a miss, and up. Citibank, I have to double check theirs. I don't know if Sterling put it in there. I'll have to look at the feed. I don't remember what there is, but they're up. So banks are mixed this morning. Well, the bigger banks are up with JP Morgan. Energy after missile strikes overseas last night. Oil is rallying and energy stocks are up. You can see that here. So far, energy strongest, up 127 basis points. Healthcare the weakest, led by UNH down, United Healthcare. Consumer cyclical also pulling back. Fed Watch tool, I just refreshed this a couple minutes ago. Now with those PPI numbers back to 1, 2, 3, 4, 5, 6, 7 cuts. 7 cuts all the way down to 3.5 to 3.75 by next December. Also, if you haven't noticed, a 10-2 yield curve, take a look at that. We're still in the upper end of greed mode. So still market holding up. It sold off a bit yesterday, but then bounced back strongly. All right. That's where we sit there. Let's see who else. Good. Where do we sit? All airlines have potential weekly double tops. Yes, they do. And Delta put out earnings this morning also. There are a lot of little double tops, and thank you for posting that. So keep an eye on those airline double tops. I was going to mention that, but Sterling beat me to it. Thank you, Sterling. It's wonderful to have great people in here every morning to pick up what I may have also forgotten to say it, so thank you. Good morning, Legion Reaver. Legion Reaver. Christoph, Grand Rising to you too. Yeah, they're doing off of guidance, but we'll see. Everyone liked the vid. Good morning, Richard. Thank you, Christoph. It will not be the same without you. It's just one day. Vol got me. The volatility was a tough day yesterday. Good morning, Martinez. I mean, it was you had to be moving stops aggressively. Good morning, Martinez. Good morning, Heinrich. I am the first to like the video. Well, there you win a prize. Good morning, Lauren. All right, we've got that out of the way now. And if more people come in, then we'll get more good mornings. I think it's important to acknowledge everyone. You know, even if some people don't understand why. Why isn't it? There we go. So, again, it's Friday. I'm not going to do anything stupid. It's got to get above really 48.20, 48.20 for me to get interested in any breakout plays. And there, you know, my key target is just in front of yesterday's high, which is about 48.34 and then 48.38. Nothing's changed. If we do break out, if it goes into Rally Friday and it breaks out about 48.41, the target's still 48.59, even going into next week. Now remember, the cycles, this will update with today's close, but the cycles are starting to roll over. So we've had the bounce back in the weekly cycles, still headed down. So I am watching for that rollover play still. Thought we were starting to get it yesterday with the, we had some Fed comments yesterday, had that sell-off and then the quick snapback. The quick little snapback. And if you look here, it did get above the 62.5. So I am still watching potentially for some upwards price action. Before I can get overly bearish today, we got to start trading below 4,800 unless there's a shorter term topping pattern or we start getting momentum to the downside. So 4,800 is roughly still the key line in the sand. Then it's got to get through 47.90, and then it would be yesterday's lows, which just missed that 47.71, 75, 72 area. So that's still going to be a key support area if we sell off. We still have the bigger double in place with daily cycles. Now that bigger double may never trigger. We might just go into consolidation with weekly cycles heading down, but it's going to be interesting rolling into next week. Very interesting. So we start breaking above about 16,980 in the NASDAQ. I'm looking for a retest of yesterday's high area. And we've missed the 87.5 still. We still have the 87.5 magnet, which would be 17,061.50. Above there, the next target is 17,127. Then you got 17,269. To the downside, again, volatile, you can see it here with these tails yesterday. We have to start getting below. I'm bumping this down. We have to start getting below right around about 16,870. And then my key area would be about 16,785 to about 16,750. Still holding the rotation zone, by the way. I mean, we drop below it, and this rotation zone is becoming flat where I start to ignore it. But those are the key levels. Again, same thing. Cycles getting to on the top of the daily, weekly still heading down. The Dow is still caught in consolidation, roughly at the same, near the same closing level from Tuesday, December 19th. So just one big old doji. Dow, if it starts breaking above 38,050, Going to be watching for a short-term breakout play. 38, about 113, and then 38, 193, 38, 274. Nothing. I'm not looking at any key breakdown until we get below about 37,550. If we sell off to about 37,630, I will look for support to kick in. Also, we have this Russell. If you're wondering if that's a double, it's really rather sloppy. I'll put on the targets just so we can keep them in mind, but it would need a solid close above 2004.6, which is also a pretty decent breakout level. So that's something, that's the only way I get at any short-term bullish in the Russell. Otherwise, because that would also break out of this consolidation pattern and get above the prior key support, becoming retested and verified resistance. Breakdown play at this point has to be coming down lower, closer to about 1945. The VIX 1250. Again, if you're watching for a little closer to gauge something, especially going into next week, I'm looking closer to about 1330 again. 1330 is the key area to start getting a sustained bear push. The DAX, after a sell-off day yesterday, gapping up a little rebound, but still this key level, 16,650 has still held. So, and still no close above 16,921. So those are the two levels I'm watching there. Notes, just edging on up slightly. I'm just going to be watching 112.18 on a closing basis. Otherwise, nothing with the notes. The 10-year yield, if we start dropping below 393, I'll start taking notice, and then 389.7 on a closing basis, because then the yields could retreat to form a bottom, a more significant bottoming pattern. However, this is still a sideways correction to me. I'm still watching for the potential breakout. Now, really important is the 10-2s. I've stressed for how many days, weeks, this minus 25. We closed above it yesterday, and we're getting the gap up in the 10-2s and climbing back to minus 12.7. So paying now very close attention to minus 0.08, minus 0.07 area. Also, do remember, we had the monthly double that triggered back in October. None of this pullback invalidated it at all. Now, this could really be kicking in. Finally, the bear steepening. A bear steepening is not good. Here's the monthly. I had it on the weekly. There's the monthly. You can see it really solidly back in October. And a little pullback. Remember, on the monthly basis, how you look for that pullback. Here was a trigger point. Let me actually update this. This is important to watch. Even if you're not interested in bonds or yields or anything else, do pay attention to this. Why? Because historically, when you start getting this back above zero, and especially above minus 20, minus 25, or positive 20, 25 basis points, it can really put pressure on the markets for a bigger correction. So you see from the monthly basis, closing above the peak, and then we watch for the pullback between the peak, if it's going to pull back, and the candle bodies. Well, here are the candle bodies on the monthly. Pulling back between it, finding support, 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 and rotating back up now. So keep an eye on this. I mean, that would be my advice, but especially once it starts getting above zero is the first big warning sign. Dollar index still in consolidation. So I'm either the major breakout or breakdown level is still last Friday's high and low. Other than that, early warning signs will be yesterday's high and low. Crude, pulling back a bit. Pulling back a bit. I'm really interested to see where crude hits. This is why triangle patterns are so hard to trade, because it runs into the next resistance area. Now it's retreating, but I'm very interested to see where crude is sitting. So it's making higher lows, but I'm really watching to see if it closes above 74.25 today or not. We're still in consolidation. Gold. Keep an eye on this. We've had some selling pressure, but it's got daily cycles to the bottom, starting to rotate back up. This is technically, if it closes above yesterday's high, it's a percent B buy. A short-term percent B buy. So we could see some continued follow-through. So keep an eye on yesterday's high. All right, and the stop on that short term would have to be below yesterday's low, the farthest away stop. So it's got iffy risk reward, but the first target area would be back to about 2093. So risk reward's iffy on that, and from my perspective. Yen, this is close enough to the first target area to raise a stop from my perspective also. So this would be a stop raise, especially since the yen struggled to really get above it. That would be a stop raise, but it's nowhere near to stop. Even if you were looking at this, the farthest away stop would be on a closing basis about 142.56. So it's nowhere near to stop. Euro still in consolidation. I'll sit up and take notice again, especially if it takes out Thursday's high and then closes above that. Other than that, the key breakdown area right now is about 109.20. Nothing with the pound. Spiders, little gap up this morning. If we roll over, 476.35 will be the first target. The next target will be about 474.75. The next target being about 473.40, and then back to the low area, 472.30, should we get a bigger sell-off. Let me look at this also. I got to flip this around. But those levels are roughly the same with the flip around. If we do break out, we're still looking at yesterday's high, 478.12. Then 478.94, and then the 479.98 to 480.33. Who will? Hey, Tony, good morning. Hey, Christoph, thank you for tuning in. Thank you for putting in all the earnings stuff, Sterling. We'll have a look at LYV in a second for you, Christoph. Q's a little gap down. Oh, sorry, a little gap up. 410. Yesterday's close 409.35. So that'd be my first target for any rollover. Then we're looking at 408.50, and then about 406.33. Then 404.20. To the upside. To the upside, we still have. Let's see here. Key levels I'll be watching is about 411.65 and then 413. Then 415.12 on any breakout play going into next week. By the way, quick Tesla, which gapped down below the 200 and key support yesterday and now following through. I think as I was logging off, somebody said downside targets. Well, the next one is 219, trading 220. Then we're looking at roughly 210. Then did this fill this gap? 205.66. What was the low here? 205.69. No, there's still technically a gap fill down here. 205.66. Was this enough to invalidate that push up? Was it enough to invalidate the double, which never got to the stop lowering point? So the stop had to be above the 62.5 on a closing basis, which it never got to after the trigger point. So the double still is in play on Tesla. It's never been invalidated. It became very close, but those are the rules. Those are the most conservative rules that were tested. That's why this never changed. Now, if we got to the stop reduction point, it would have been invalidated, but we didn't get anywhere close to the stop reduction point. Let me take a look at LYV for Christoph. As you see, I haven't looked at this in a Live Nation Entertainment. Okay, I've obviously looked at it before. This is not something I look at routinely. You guys see what you're trading. You got your double. On this gap down, I'd actually be reducing the stop from my perspective, Christoph. So this would already have just with that 50 right there in front of the first target, I would be a little aggressive moving the stop down. I am not in this at all. It is a completely valid double, but I did not look at this. So that stop reduction would be on a closing basis 92.44, on a trade through basis 93.32. So that's how I'd set up with that 50 being there and that close to hitting the stop reduction. And catching on the 50, I'd reduce it anyways. You're getting daily cycles back to the top. Weekly cycles are still headed down, so this could be set up for, as long as it doesn't invalidate it, I'll be watching again for another rollover potentially next week. Is anything investable at these valuations? Still T-bills, high yield savings, and tactical trading for me. I think that's the best course of action versus longer term investments. Any longer term investments, I believe, should be hedged also, especially on extreme rallies. Okay? And anything you're holding longer term, I think it's wise to at least keep some kind of hedges on it, or covered calls, stuff like that. I'm still not satisfied from a valuation point of view. I mean, what's the Schiller PE is 32.17. The historical mean is 17, median is 15. Look, even what was the low last year? We got down to 28. That's nowhere near this. We're going to do a mean reversion at some point. We're not in some new paradigm that's permanently stuck. And if you're just going off the standard PE, which the mean is 1604, median is roughly about 15. So let's go 15 to 16. We got down to 20. And now we're back to 25.94. These markets are not cheap. That does not mean there is not tactical trading, as you said. There are tactical trading opportunities. But I don't want to get married to a lot of long-term stuff. Short-term, fine. You know what? It's a trade. Like Nvidia's is tradable. I don't want to just blindly slam Nvidia into a portfolio, because if we start getting a major pullback, this is going to pull back too. Even with earnings increasing, this will pull back too. Now, is it tradable? Yes. But is it, something you want to get married to? Like, I wouldn't be married to, if you're a long-term holder of Apple, I would be looking to set up hedges, especially if you start breaking below 180 again. If you didn't want to sell in the short, or, due to a tax situation or whatever, long-term holdings, keep that in mind. Coin, and please, just today being Friday ahead of Martin Luther Day, Monday after, getting to cycle tops, please don't do anything silly. Coin not quite to the final target of that double, but this is pulling back with that thing, and the ETFs now coming back. 135.50 is the next target. Below there, it's not strong. Below there, then you'd continue into a clear path move with the next target being about 118. Now let's look at the retracements. So in the middle between what I just listed, I would look at about 128 and then the 118 on a closing basis if you're looking for anything for this move up to be potentially over 113.79. So that's where that sits. Hey, thank you, Christoph, for the super sticker. You're very welcome, and thank you for supporting the channel. No, it does not change Bitcoin legit. I'm actually surprised they approve them. And if you look at if you read the letters, look at the dissenting letters. They're saying these things are, and Vanguard's saying we're not touching them because of the amount. Even though the dissenters in the SEC dissenters, they cited 77% of crypto is wash trading in Bitcoin. They're even saying it. So it's not a suitable investment for a lot of people. Yeah, you want some diversification? Fine. But I would not get married to any Bitcoin. Is it tradable? Yes. Is there any, you have 77% wash trading. It's a very manipulated market. It's tradable. I would not get married to it. And I think a lot of people are just rolling, oh, I'm going to put everything in Bitcoin. I think that's a silly answer. There could be major wipeouts. There's no more legitimacy. It just gives people another vehicle to trade it and to screw themselves up. So, is it tradable? Yes. You can trade it with caution. Again, keep that in mind. It doesn't make it more, it doesn't change the underlying corruption and scamminess and illegal wash trading behavior and just illegal tether printing that goes on. So markets into the open, we look like a pretty strong move so far up. So I'm going to be watching for a big, oh, that's a very powerful 1500 tick. That's the highest since December 23rd. That is a very bullish tick reading. So we're going to be watching, especially on the pullback, if it keeps holding, if it really holds 500 to 600. So it looks to me like even on a pullback here, we're going to want to test some of these highs from yesterday, some of this high area, as long as it doesn't really collapse back below about 48.20. So that's where we sit. Bitcoin is a government. I don't know about that, but there's enough. Just be very careful with the good old Bitcoin. The good old Bitcoin still on the I'll call it the cash market. This is on Coinbase, running up that 62.5 and no close above it. You got to learn these harmonics. So keep watching. I just watched 49K, just 49K on a closing basis. You get above 49K, it could start another run. You don't, it'll get interesting. That's where we sit. Everyone have a fantastic, fantastic Friday. Glad we made it through the live stream without anything going out. Have a wonderful weekend. Have a wonderful, if you're in the USA, Martin Luther King Day, if you get it off, or if you can take it off even from trading, just take it off. I mean, even from futures, just take it off. Unless I'll pop on if something major happens in the futures market. Other than that, like if there's something happens over the weekend and we have like a tremendous gap down or a gap up or some, otherwise don't expect me on Monday. With that, bye for now. Oh, do I have a vid going over harmonics? I think I do. If somebody knows of one, let Christoph know. I think I've put something up there. I think I have, but we can talk more about that next week. I gotta jump into the open. We'll see how much this pulls back with the tick pullback. Watch to see if we get a nice rotation back up. With that, I'll talk to everyone later. Bye for now.